So you just got your auto renewal and your premium is way more than it was last year. That must be a mistake, right? Nope. And guess what? You're not alone. So what's driving this increase and what can you do about it? Let's dig into it. Hey folks, I'm Eric Lonsinger at Ford Insurance, and we're going to start by quickly talking about why rates are increasing. But if you want to jump straight into the tips, check the timestamps below. The tough reality is auto and home insurance rates are on the rise across the country, and it really couldn't come at a worse time. Household expenses are up across the board. From groceries to electricity, we're just spending a lot more money on everything today. Now, I know that's not really news, but clients often ask me why the increase seems so drastic when it comes to their auto insurance. I mean, I think everybody expects their rates to go up a little bit year over year, but some people are seeing really drastic increases. So, what gives? Well, just like we're feeling the burn in our wallets, so are the insurance companies. They're simply not immune to the rising costs we're seeing everywhere, and the auto industry is especially hard hit for a couple of reasons. First is we're getting back to normal ish. During the pandemic, we pretty much stopped driving. And because of that, there were less accidents, meaning less claims, meaning less overall costs for insurance companies. And many of those companies responded by issuing refunds and lowering their rates. You may have gotten one of those checks. It was actually a pretty nice surprise. But today we're back on the road and those claims are back up too. Now, that in and of itself isn't necessarily the issue. I mean, we're simply getting back to where we started, right? Well, yes and no. Remember what I just said. A lot of companies slashed their rates, but now they need to bring them back up to sustainable levels because of the rising volume of claims. But that's not the whole picture. A minute ago, we talked about rising costs, and the auto industry is certainly not immune. The cost to repair vehicles has gone up considerably, with parts and labor shortages being one of the main drivers behind it. By the way, this isn't just affecting the cost of auto insurance. These are also big drivers raising the cost of homeowners insurance too. The other biggie is the cost of the vehicles themselves. I mean, I don't know if you tried to buy a car in the last couple of years, but man, it's been crazy. New cars are selling above MSRP, and used cars are selling for more than they were new. Now, this overpricing has calmed down a bit, but prices are still elevated, and they're expected to remain that way for at least the foreseeable future. So, in a nutshell, we're back to our old habits of driving around and bumping into things, but now it's simply a lot more expensive to fix and replace our cars. So, what can you do about it? Well, aside from just bending over and opening up your wallet, here are 5 things you can do to make sure you're getting the right coverage for the best price. Number one, the very first thing you should do is check your policy. If you're intent on keeping your current insurance policy, then make sure you review it for accuracy. You'd be surprised the number of times I've seen someone forget to remove an old vehicle. It's also important to review how your vehicles and drivers are rated. For example, you may be eligible for discounts based on the driver, or the use of the vehicle, and even the miles driven per year. Number two, discounts. Look into the discounts your company offers. For example, if you own a home, it's generally a good idea to keep your homeowners and auto policies together, and you'll typically get a package discount. Now, discounts vary by insurance company, but there are a ton out there, from good student discounts to good payment history and more. So be sure to explore your options. Number three, special programs. Beyond bundling, some insurers offer various programs such as vehicle telematics. This is when you give consent for the company to track your driving behavior, and they can discount your rate when you exhibit safe driving habits, like not speeding or braking too hard. Number four, deductibles and coverages. Another option you always have is to play with your deductibles. You can even set different deductibles for comp and collision, and increasing either or both could end up lowering your overall premium. So ask your agent or contact your company and play around with the numbers, see if it helps. And while you're at it, review your coverages. Generally speaking, I'm not an advocate for reducing coverage, but there are scenarios where it can make sense. For example, if you have a car you only drive in the summer and it's stored for the winter months, you may want to look into removing collision coverages for those months, since you're probably not going to be driving it around and getting into an accident. If you do make this change, make sure you reverse it prior to driving that car again. Otherwise, you're going to be out on the road with an uninsured vehicle. Now, if you're not tied to your current company, then that brings us to number 5. One of the best ways to save money is to shop out your policy and see if you can get a better deal elsewhere. While this does come with a little legwork, it can be well worth it. You can easily do this yourself, or you can enlist the help of an agent like us to do the legwork for you. On that note, people are often surprised to learn that it doesn't cost you anything extra to work with an agent. In fact, the opposite is often true because a good independent agent will be able to help you find the best deal and save you money because they have access to a variety of insurance carriers and can find the right one to fit your needs. If you're interested to learn more about how this works, let me know in the comments below and maybe we'll do a video digging into it further. But to give you an idea, here at Ford, we partner with some of the most innovative carriers in the industry. Now, why does that matter? Well, generally speaking, the less insurance companies spend on overhead, the lower the rates they tend to offer their customers. So think about all those insurance commercials you see every night. Those cost a lot of money. So do large offices, operating expenses, and, well, everything else. Those costs need to be paid somehow, and ultimately, it's by you, the policyholder. There are innovative, technology-driven companies out there that are focused on providing quality insurance products at competitive prices without all the bloat. As a technologist and an independent agent, those are the partners I actively seek out. Now, to be clear, we still have access to and use those other companies we just talked about when it makes sense. Like if the price is competitive, or maybe they offer specific coverage options that you need. So if you're interested to see how this could work for you, go ahead and visit the link on the screen or grab it from the description below, and we'll do our best to help you out. Even if we can't, we're happy to answer your questions and offer advice. As always, I hope you found this video useful, and feel free to drop a comment below with any thoughts or questions.